Hey guys, welcome back. In today's video, we are talking about how the squeeze is starting, AMC at $22, beating the shorts, and many more in this video. First, we're taking a look at this. AMC both glitched the same day. What a surprise. AMC up to 22 and GME up to 550 must be nothing. So when we take a look at the price, and by the way, anyone can go take a look at this on Chart Exchange, you can see AMC is around $22 and GME is somewhere around 580. Now, for those of you who've been keeping up to date recently, we've talked about how the shorts are showing weaknesses in various different perspectives. When we take a look at how AMC has improved fundamentally, when we talked about how short sellers of AMC has gone bankrupt, not to mention that some are of course selling their short positions, some are switching to long on AMC, multiple different things have indicated that shorts are all facing a problem. They've realized what is about to happen, and they've obviously trying to be prepared for what is about to happen. And again, yesterday we talked about Goldman Sachs actually selling off all of their puts, and bearing in mind Goldman Sachs is someone who constantly spoofs AMC, and so we obviously understand what's happening there. And right now, again, you can see these glitches that they call it for AMC and GME. Notice is how it is always AMC and GME, and remember, it's because these stocks are obviously the ones that exposes the biggest risk to all of these short sellers, and will obviously bankrupt these multi-billion-dollar firms when things go south for them. And that's what we are seeing right now. Again, I'm expecting to see more quote-unquote glitches happening, even though we know that's what's actually happening right now. We know that that is actually not a glitch, but it's just that they obviously had a slip up in the system where it showed the real price of AMC. But also it's bearing in mind right now that this is only the start, because when we take a look at what has happened in the past, AMC ran to $720 pre-reverse split. I was here, I remember. If you want to correct for dilution and ape, even Webull admits it was 321. That was on a worse business with less shorts and less global chaos. Good luck, shorty. So you have to understand where AMC has gone in the past. Now that itself is already showing in terms of the potential there is for AMC. It's in terms of showing the ceiling, as you would call it, of where it is. But it doesn't mean we are stopping. And if anything, it's actually the floor price. Now, of course, we'll talk about how actually we are seeing it even higher because of what we've seen in the past. But just looking at the chart in terms of what has shown us, this is what was given to us. And we have to understand one thing as well. This was when there were less shorts. And that's the biggest emphasis. Because something we have to know and realize is that they have created even more synthetics since then. They've had to create synthetics every single day in order to suppress the price of AMC, in order to make sure that they don't go bankrupt. So understand that if AMC was able to go to that price back then with a smaller and less amount of shorts that there are now, just think about where AMC is going to go now. And this is just to show you the potential there is. And this is from data that we've seen on the chart. But if you want to take a deeper look in terms of data that we've seen otherwhere, this is somewhere that we talked about in terms of in the past of where AMC was. And we talked about how actually this reviews AMC's true value of $30,000 per share when APE was introduced. APE never settled, set your exit price appropriately. So here we talked about where these AMC has gone in terms of on the chart. Wherever you're taking a look at TradingView, on Webull, or Robinhood, or whatever you're looking at, you will see that AMC has obviously gone to an extremely high price. But if you want to take a look at other proofs of just how high AMC has gone in the past, well, this is also one of them. Now, essentially what this is taking a screenshot at when this particular person bought AMC, bought APE for 5 shares, the estimated order amount came to $50,000. So this is $50,000 for 5 shares. Now, with very simple mathematics, you'll understand that it meant each share came to $10,000. Now, the reason why we talked about why AMC's value was $30,000 was because firstly, you have to understand that this was ape shares, and we know that the ape and AMC float was a third ape and 2/3 of AMC shares. And so because of that, we obviously understand that the true value of AMC was $30,000. So this is from what we have seen in the past. And even if you take a look at the screenshot here of how much AMC was obviously being bought for, you will just see multiple different indicators, multiple different data, which is showing you just how high AMC can go. And so this is from, of course, the orders being actually going through. This is from the charts that we talked about. So you can understand why I said when we're seeing AMC at $22, this is only the very beginning. And I'm not even talking about the beginning of the squeeze. I'm talking about the beginning of this whole thing. Because this is only the beginning in terms of actually showing what AMC's true price should be. I'm talking AMC based on no suppression, no exploits of AMC, no FTDs, no tokenizations, just pure fundamental reflection of where AMC is. Of course, when the squeeze is accounted for, then we're going to be looking at 2 more extra zeros at least at the end of 20, right? And that's where we are, of course, looking at. And you have to understand, here's a small sampling of why there's so much risk for them on AMC. You can see, imagine a world where you've been suppressing a stone for years and layering on swaps, tokens, and shorts. Now look at just 4 sample call strikes from today. AMC was only up 10.58%, but look how these moved. Now look at the open interest on the options chains going out. And that's just the options. That's to say nothing of tokens, swaps, etc. If it really goes well, no date, no prices as say, but again, the hope is obviously high. When you take a look at this, this is from AMC going up 10.58%, and you're looking at how drastic the AMC call options are, of course, moving. Now, this is what we are looking at. So going to this next post, you understand why it makes sense and why we talked about shorts realize what's happening. And we've talked about this, and it's why I've said we're looking at the start of what's to come. Because when you take a look here, firstly, you can see Goldman Sachs sold 100% of their puts on AMC 5 days ago. Since then, the stock is up 16% and rising. Now, just like what we talked about here, with how much obviously call options can go up, you understand how much they will be losing on puts. Goldman Sachs knew that. So this is a sign and showing how they knew there was going to be weaknesses in shorts, how they knew AMC was actually going to go up because they didn't want to lose out from the puts, but because they also knew that AMC was going to go up. Remember, Goldman Sachs obviously has various amounts of knowledge in terms of the Wall Street institutions. They know when they are crumbling. If we have already deducted, if we have already found out that the shorts are weak, Goldman Sachs would have known this as well. And that's why, despite the fact that they're always spoofing AMC, hence why they are buying these puts, they actually sold their puts. And this is what we talked about of how AMC is obviously beating these shorts. And I want to put more emphasis on this particular post as well. So this is from a user who said, ain't much, but it's honest. Now, essentially buying AMC, you can see shares value of a number of shares, 10 shares, around £21 or £22. And you have to understand is that every share buys forces whoever promised to deliver IOU to extend their risk just a little more, increase the amount of collateral they hold a little more, and eventually the cost will be too great. Enough small retail share buyers who never sell will ruin them eventually. And so this is to anyone, even if you're buying one share of AMC, like we've said, there's always been a massive range. We've seen people who have bought tens of thousands of AMC shares. And we've also seen people like this particular person here buying 10, some even 1 share. But it isn't to say you're not having an impact, because remember, every share that you're buying right now is a synthetic share. Does that mean you're not going to get its value? Of course not. What it means is that then you're putting 1 extra suppression on the short. So whilst they've been suppressing us by, of course, pressing down the price, we can also suppress their collaterals by buying these synthetic shares that they are obviously creating. And so it isn't to say that you should be ashamed or you should be scared if you're only buying 10 shares, because every share that's being bought pushes pressure on the short sellers. None of this is ever financial advice, so do take it as a grain of salt. Make sure you do your own due diligence and research But I just wanted to highlight in terms of how we are obviously able to beat the short. And you can even also see this just in hedge fund uses record leverage to short stocks. So you can see how they are worried right now. You can see how they're trying to obviously suppress AMC, but the ones who are realizing, and again, going back to what we talked about here, we're seeing record shorting, yet Goldman Sachs are selling their puts. Obviously, that's talking about how they're not for shorting AMC. And so this is how we know that AMC is starting right now. This is how we know GME is starting. This is how we know the shorts are crumbling, and why I'm very, very excited. Anyway, guys, thanks for watching this video. I'll catch you guys next time.